Rightio, fellas. So I'll just try and be as quick as I can. Don't want to keep it too long. Just a few new people, and there's a few things I've just changed. So I thought I'd just quickly run you through what I've done. So just quickly on this month, ended on a positive. That was obvious, but um, you know, the first 2 weeks was where all the fun was, right? We had a few good big days, right? But the next 2 weeks, which last 2 weeks was very quiet. There wasn't really many trades. Wasn't really anything that was worth, trading. There were opportunities. There were some losses and so forth, but nothing major. There was, however, so if you remember an email I sent back about a week or two ago, I said I was looking to get long because I had a feeling the market was going to do a fake move and then reverse and capitulate to the upside, which it did, which was really good because we got a pretty good few trades out of that. But at the same time, I had to partially close some short positions that I had in the market. So about not all of it, just 25% or 50%. So I took a loss, but nothing major. And plus, we were already hedged on the long position, right? So as I was buying to go up, these positions which were to go down, I was closing a partial of that. So, and probably technically, I probably didn't need to at all. But I've been through this situation before where I've said the same thing, and then before you know it, sometimes the market, sometimes 9 out of 10 times the market will do what you expect it to do, but then that 1 out of 10 times, that exact same setup, for some reason it might just go against you. It just keeps going. It tends to happen. So, and before you know it, what was originally a $200 loss that you could have taken, end up becoming an $800 loss or whatever. And then you're stuck. It's a psychological battle at that point. You're pretty much like, oh, okay, well, what do I do? Do I close it? Do I hold it or what? What do I do? Do I just take the losses or do I add more money into the account? What do I do? Because it might get to the point where you might get margin called, or you might be at risk of getting margin called. But the other reason is, most of the time I'm right. Most of the time I know which way it's going to go. The problem is picking the entry, getting the right entry and the right risk to reward is always the hardest part because, and that's why they say, take your losses, cut your losses, and then either re-enter or look for another entry to get back in. Because sometimes you might be off a little bit, but that little off a little bit could be, a lot of money. So yeah, again, it doesn't affect the portfolio, it just affects that individual trade. We'll look to get back in, doesn't really matter. There's enough margin. It's just like I said, I just been through this before. I don't want to go through that again. Of that psychological battle. It's a mind fuck. So you don't. Yeah. So that's that there. But again, like the market, I've been saying I know I keep saying the market's about to turn, but every time it looks like it's going to turn, something happens and it just pushes it all, and it's a major rally. These are institutions that do this. Okay, it's not anyone. It's the big banks or hedge funds that are doing this. But that's coming to an end, right? They can't keep doing that forever. And I'll just show you the quick chart what I mean when I say that, but. Say the S&P, for example, you've got market moving up as you can see here, but the volume has significantly dropped, right? It's well below average. So that tells me there's weakness, right? And this is heading into a level of major resistance, right? This is a lot of resistance here. It's not going to be easy just to walk right through that, So, if they do go, if it could go through that, but if it does, then that's going to be more problems later on anyway. So this is about to turn. There's also a major cycle turn that's in place. It's all converging towards this 10-day, 30-day, 253 to 1,000-day cycles. So these are all lining up. So this month it should turn. It's just it hasn't yet. So but it's getting there. So we'll see how we go. Either way, we will see some drop. Now, when I say a crash, I don't mean it's going to crash all in one go. I should use different words, but there will be a correction, a big correction, okay? But in terms of an absolute crash, like a flash crash, I don't know. That could happen any time, really. But the higher it goes up, the more likely that will play out. So that's that there. But relatively quiet, pretty boring. Like I said, there was a few days where we made, I think, it was the combined thing. All of us together. Myself. We made. It was about. I think it was about 14 grand or something like that in those 3 days. But obviously that was just those 3 days. You've got to include a couple of losses that happened after that, and I don't usually calculate those until either the end of week or end of month, because I don't want to really let those results really affect anything else. So yeah. Now something I've changed in the updates thing. So what I've done is I've just changed the color of that. It's pretty much the same thing. That's what you would have seen before. Just this, right? You just see your P&L, what's your capital, how much you've grown, all that stuff. So what I've added in now is just another column just to show how much you've made month by month, and then just the equity curve. So it shows you a nice steady rise, right? So, which is good. It looks like it's starting to exponentially grow. Okay? And that's what I've told this guy. I told this guy, he was the first guy to come on. Like, he gave me the idea of doing this, so, because he basically got lazy. He didn't understand what I was saying, so he said, just fuck it, you just do it for me. So that's how it started. Now, when he first started, I told him I'm just going to make him steady gains, and 1,500, since August, that's where he actually started, less than a year, and he's already 187%. And this is being very conservative, right? Very conservative. We didn't take too many risks, right? There were a couple of big months, right, considering the account size. But I said to him, you really want to keep, you can turn 1,500 and double it in a day if you want to, right? Easily. You can, but sustainable, not sure, okay? But he hasn't withdrawn once, right? So, and that's the whole point of this, because every time you withdraw, you're taking money out of the position, your capital, so say for example, I was trading, say you went from $1,000, you were trading like, say, one lot, and then you got to $5,000 and you were trading, say, 5 lots. So your equity curve technically should be going higher, much higher, faster too. But if you take 2 grand out of that, then you're back down to 3 grand, and then therefore you can only trade maybe 2 lots or 3 lots, right? I'm just using numbers as an example, but that's where if you do take it out, you want to make sure you don't want to you want to make sure you're not affecting this growth, right? So but I think he's close to a stage where I can start upping his risk a little bit more to grow it faster, because again, this is all about capital. Like, you don't have to just because you have 10 grand or 50 grand or whatever, it doesn't mean you put in 50 trades, right? You can if you want to, but it becomes hard to manage, right? But even 2 good trades, right, on a $100,000 account or whatever it is, like 2 trades a day, you can make a fair bit of money. And plus, you don't even have to worry about the risk, because you've got so much room to play with, because the market's always going to move up and down like this, right? It just does this. This is a daily chart, and look at say for instance here, right? This area here, right? This area here. Look how many times it's touched this level. 1, 2, 3. 1, 2, 3, 4. So these tops hit 4 times, these bottom 3 times. And this was from the 3rd of November to 29th, so the end of the year. So 2-month period. And this is on daily chart. If you go down to the 1 hour, you can see a lot more of that. But, so if you bought in, say, here, right? Then you would sell up there, you would short there, and then sell it here, and then buy again up here, and so forth, right? But that's why you don't want to. Most of the time, you got to let the trade play out, and it'll eventually. Otherwise, if you just keep closing, re-entering, opening 50 million positions, you just end up losing anyway. So and I've done all that before in the past. So it's, yeah. But yeah, even here, like you can see, like it's just within this zone here, you can see how many times, like look how many times there's so many interactions in between, right? These aren't random too. You can find these particular setups, and you can find where to enter and go long and stuff. So that's why I said it doesn't really matter if you have 4 or 5 trades. You can have just one. That one trade can make a lot more than all those 4 trades. So so that's that there, and yeah, equity curve. So the guys that started this month, you'll have the graph, but you won't see any curve because you've only got like 1 or 2 months worth of data, or 3. So yeah, just some stock market stuff I thought might be useful. Currency market, so just keep an eye on the Aussie dollar because 60 cents is likely. But yeah, gold and silver is really important. So you want to, if you haven't looked into this, you got to look into it. You need to start looking into this, and you need to act on it because there's not much time left. I don't think in terms of where it's. You can't just walk into a gold. Right now, you can walk into a bullion dealer and just buy gold, right? Because it's available. There's no real demand for it just yet. But once demand picks up, and it will, you're gonna start to see shortages, price rises, premiums go up, spreads go up, right? And this is all the people lining up for the Apple iPhone. I wouldn't be surprised if you see this kind of thing outside bullion stores or jewelry stores in the near future. When people finally realize that gold and silver is real money and that they are a store of wealth, right? And when people realize that, they're going to flock to go get this stuff. So start looking into it. I can help you out. I can tell you where to buy stuff, but you got to get something. You got to at least, even if you can't afford gold, buy silver, right? Or if you can't buy silver, or whatever it is, or if you want to you buy gold, then just buy like you don't have to buy 1 ounce. You can buy like a quarter, right, of an ounce or whatever it is, or 1/8. They do sell them, so just buy it. You need to. This is a must, right? Because there's going to be a lot of people. Where I said down the bottom here, there's going to be a lot of people that are going to look like fools after this, right? Especially the ones that knew, but then didn't do anything, right? So I'll leave it there. I don't want to take too long. It's 12 minutes. That's already too long for me. So any questions, let me know. But yeah, pretty decent month. And like seriously, you'll probably notice, some of you guys probably notice, the gains were, reasonably pretty good. But really, we could have had a lot bigger. I reckon we could have had a lot bigger. But again, being positive is better than being negative. Okay? All right. Cheers. See ya.